Summit here in Davos, and I have with me Neeraj Kanwar of Apollo Tyres to talk us through how he views the demand scenario, not just in India, but across Europe. So that's a global view, the future of mobility, and how he's taking stock of consumer demand. Thanks very much, Neeraj, for your time here. Let me start by getting an overview of how you're witnessing demand both in India and Europe, and that should be fairly reflective of the world, given that you service both passenger and commercial. And this gives us a sense of the retail consumer as well as, large business.
Well, thank you, first of all, to have me.
Pleasure.
Well, I'll start with India. India, I'm seeing a revival of the CV segment.
Yes.
And that's primarily because of all the infrastructure funds that are coming in, building roads, building ports. So that's a very good sign. Obviously, our base is very low. We are not yet reached pre-COVID levels, but at least there's a very good underlining positive journey going towards the CV cycle. In passenger car, we're still finding shortages in the semiconductor, but that's, I think, taking shape. And very soon we will see a growth in the passenger car segment. Farm has had a very good growth for the past 3 years.
Yes.
And it's a very cyclical business. So we are really seeing a flat kind of a growth in farm segment, farm tires. Inflation is obviously a big, huge challenge across the world, not only in India.
Yeah.
We're trying to see how we can maneuver costs into trying to see how we debottleneck our plants, trying to improve productivity. So trying to do all of those, but at the end we have to increase prices.
Right.
That's the only way we can optimize our cost push that's coming into the company. As far as Europe is concerned, there's been a total turnaround in the company. We were able to specialize our plant in Holland, moved most of our production to Hungary and to India. So that Make in India brand is really happening because now 20% of our production in India is exported out. So the demand is flattish or maybe 3 to 4% in passenger cars in Europe, but for us it's very good.
Okay.
Our brand Vredestein is doing very good in Europe. Our margins are very healthy. They've doubled. We had around 17-18% EBITDA margins. We're gaining market share, especially in countries like Germany, the Netherlands, Spain is upcoming. France is doing very good for us. UK is doing very good for us. So slowly, Vredestein is inching up. Also, what we are focusing is on the higher segment of the car industry, which is the ultra high performance and the ultra high performance tires, which is in the S classes, the Ferraris and the Porsches of the world, where our market share or our percentage of the entire pie was only 30%. Now it's gone to 43 to 44% of our entire passenger car production in Europe is towards the ultra high, and that's one of also the reasons for EBITDA margins going up.
Right.
So again, there is inflation pressure in Europe. Oil prices are at $110 a barrel. We are passing on prices here. This is much more matured market and price insensitive market rather than India. India is still maturing, so there we have a 3 to 6 month lag before we can increase prices. Whereas in Europe, we are going on increasing prices as competition is also increasing prices.
Okay. A very specific question to Europe, given the energy concerns right now that we're witnessing across Europe,
Yes.
or maybe not specific to your plant locations, but I'm just wondering because you rely on a variety of other inputs. Are you fearful of large scale disruptions through the course of this year? As
Well, we
Europe
already
comes to
seen.
terms of, because we're already seeing some
Yeah,
shutdowns
in
in
quarter
smaller
one, we've
businesses.
already seen our energy prices shoot up.
Prices is one thing.
Yeah, but
second is
disruption.
actually if businesses shut down because of paucity of gas supply or
Well,
irreplaceable
right now we are
fuel
not
sources.
seeing that, but we have started investing heavily into solar energy in Europe and in India. We, in fact, have a huge problem in Andhra because of coal shortage. Andhra is allowing us only 50% of energy, and we have to reduce our production in Andhra by 50%.
Wow.
And that's a big, huge problem for us.
So that is for a specific period of time the state government has told you?
Well, the state government
or as yet
told
you
us,
have no idea, no visibility
they
on
said that they will take a decision by 20th of May. But as you know, we are sitting far beyond that and we still haven't got any
The
decision.
Andhra state government is down the road.
I'm trying to meet them.
Did you have a chance to speak to them?
No, I'm
No,
trying to meet them.
I don't mean to pass it off in jest. it's a very serious disruption, right?
Yes, yes.
So as yet in Europe, you aren't seeing any such
No,
shutdown.
no.
But have you been cautioned by governments saying this could likely happen?
No, not as yet.
Not as yet.
Not
So
as
there's
yet.
no fear there.
No.
But in India, you've lost capacity
India,
because of
and
this.
this is our brand new plant. It's a new generation plant. We've invested heavily into this
So
plant.
how much capacity has gone offline because of this?
50%.
50% of your
Yeah.
India capacity has gone offline.
Not of India, of Andhra.
So
Of only
of
Andhra.
of your total India capacity,
It would be only
20?
10 to 15%.
10 to 15%. Yeah. Okay. Okay. So that's the sort of the near-term challenge, right, of dealing with higher energy prices, disruptive supplies, or supply disruptions, as one may call it. Let's talk a little bit about the medium-term challenge, which is can demand sustain in the face of what we've seen happen over the course of the last couple of years. The pandemic, which has had different impacts in India, lower income groups, in Europe, and then of course the price rises that we're seeing right now, which is also impacting citizens, and the potential rising interest rate scenario across the world, which impacts things like CV loans in India, and therefore makes it that much more tougher to keep generating demand momentum. How are you witnessing that as a medium 6 month to 1 year to 2 years
See, I
challenge?
think we are on a good positive growth journey in India.
Okay.
Okay, because of the hardcore investments that have gone in um, building the foundations of India. And what I'm also hearing in Davos from the various Indian center ministers is that we are looking at a very good GDP of 8.5 to 9%.
Yes.
Okay, there is the job market is there. Startups have really given economy a boost. So I'm pretty optimistic about the Indian demand, especially in the CV cycle. As far as Europe is concerned, we have to be a bit cautious about what's going to happen, especially with this conflict of Russia and Ukraine. We do see demand at 3 to 4%. The biggest challenge that I see going forward is going to be supply chain, and that has over the past 1 to 2 years since the pandemic happened, freight rates have increased,
Yes.
not only doubled but have gone up by 5 or 7 times. Getting containers, getting ships to routes is impossible. So supply chain is a big challenge going forward, and that's why you need near-term facilities to cater to the OEMs, and therefore for us it's good in a way. It's positive because we do have 2 plants in Europe,
Yeah.
so we can cater to the European market. But the issue still remains that the 20% export that's coming out of India is going to face that supply chain issues, which we are currently facing. It's taking ordinary course. It used to take a ship from India to Europe to Rotterdam. It used to take 30, 45 days. Today it's taking 4 months to 5 months.
Wow.
Okay. So this is a big issue which is adding on to the cost. And then you're also losing customers as we speak because of delayed shipments.
Because they're moving to
Yeah.
nearby vendors.
And that's one of the areas where we need to become efficient in India is the infrastructure of our ports and the efficiency of our ports on dealing with making India an export hub. You'll first have to create that infrastructure. We'll have to create warehouses for large warehouses to keep products for us to ship them
That's
out.
a longer term challenge, right, for India.
Yes.
In the near to mid term, what does a company like yours do if you're either losing customers or you're losing profitability?
Well, we are
Because
looking at
your money is locked up, your product is at
Yes.
sea.
So we are looking at various. I mean, the main issue is whether we can produce the same tires or same products
Closer by
in
to the
closer by
customer.
to the customer.
Yeah.
And that's why we are looking at debottlenecking our Hungary plant. We're looking at back to our Dutch plant to try and see how we can increase the UUHP tires over there.
Okay.
So try and cater to the
So that would be
European
mostly
market.
brownfield kind of
Yeah.
unlocking of capacity.
Unlocking of capacity. The other thing I want to mention is that we're putting in a lot of money into digitization.
Okay.
We've hired a CDO, a Chief Digital Officer. Under him, we have a digital hub now in London, where we hired young PhD students who are now studying machine learning, studying machine data. Artificial intelligence is going in to try and see how we can increase machine speeds, how we can cut down on breakdown times of equipments. So there's a lot of machine learning and AI happening in our plants. That in itself will be an investment towards increase in production from the same equipment.
Okay.
So my focus is by doing that, the net goal should be improvement of our ROCE. That's what we are looking at.
Okay.
We had gone down on ROCE because we made three large investments over the past 10 to 11 years in Hungary, in Chennai, and in Andhra. Now it is time to internally consolidate, look at how we can improve our ROCE. So, in whatever actions we take at a senior level, it's all pointing towards an
So higher
improvement of our.
productivity, better return on
Yes,
capital
yes.
employed. I just to go back to this issue of Indian exports and and the sort of the jam that we're seeing thanks to freight and logistical issues. Uh, do you see this being a medium to long term problem, and hence maybe reconsidering whether that export potential continues, uh, or saying, hey, can I create some medium to long term capacity within Europe, not just brown field, but maybe new capacity, and not expect India or not ask my clients to rely on supplies from India? Are clients getting jittery and saying, hey, we want more near located supplies?
So
We
we
don't
are
want to ever be
we
in
are
this
not
situation
very
again.
large in OEs in Europe.
Hmm.
We are a small, just getting into the OEMs in Europe, whereas we are very large in India with OEMs. So we are catering to the OEMs from our Hungarian and our Dutch plant. So that I'm not concerned about. India will always remain as an attractive destination for producing smaller tires, okay, which are because of the cost. So they are low cost, high profitable margins, and that will have to come from India. So
Okay.
we'll have to face those challenges, try and have longer contracts with container people, with the shipping companies, and try and protect our exports. We have to. There's no other alternative.
Any other changes that you had to undertake to deal with this supply chain challenge?
Uh, no, not
And
really.
this supply chain challenge has added how much to, let's say, things like working capital costs, or how much has it taken away from your margin, or how much can it take away further from
Well,
your
so
margins?
like I said, supply chain remains a big challenge,
So difficult to
and
quantify the financial
yeah,
costs of
yeah,
this?
yeah. Can't quantify, but like I said, costs have gone up. Partly we have been able to pass on those costs to the customer, but
Okay.
partly we have to absorb.
Okay. You've been able to scale up India market share quite dramatically, haven't you? If I understand correctly, the
Yes,
data seems to suggest that you've gone from 27 to 31% in the TBR segment. I'm right about that?
yes.
How have you managed to do this, and what's the forward plan with this in terms of
Well,
can you take it up further?
TBR is a very specialized product.
Yeah.
We were the first entrants into India with a superior product. Or see, for me, there are two key philosophies or two key pillars that we invested. Even during the pandemic, we didn't stop investments in R&D and in the brand itself. So today we have two R&D centers, one in Holland and one in Chennai. Chennai caters to the Asia part, and Europe caters to America and Europe. And I must say that R&D has done an excellent job. We have over 350 scientists, engineers who have come out with the right product. This product has to be marketed with the fleet guys, with the driver, help them understand this product, help them to get the best efficiency out of this product, may it be in fuel consumption or mileage. And that's where our teams have been working on the road, on the street, with the fleet owners, with the truckers, to try and educate them. And that's how we are gaining market share.
Okay. And
So
there's
we
scope
have,
to do more.
well, I
I mean,
think,
can this 31 go to
no,
33
I
in
think,
like?
I mean, that's
No,
anyone's guess.
no. It's also the structure of the market, right? I
Yes,
mean, I'm
yes.
guessing you're taking away from. Um,
We're taking away from competition. The MNCs have come in, they've not been that successful.
yes,
They've not been able to understand the road conditions
and they
or the
don't have the
customer,
distribution that you have.
and they don't have the distribution. We have been, from legacy, we've been a truck company.
Yes.
Now our emphasis is on passenger car, and in the entire radial segment is where we are emphasizing a lot on. So today we would be second in farm, we would be number one, number two in passenger car, and clear market leaders in truck.
Correct. And so I think there were two highlights I picked up in all my reading I did over what you've been able to achieve in the last 4 years. A, consistently build on your leadership position and increase market share in India. And B, like you pointed, turn around the European business. I think your margins have now gone from 8% 3 years ago to
Yes,
18%.
yes.
What is left to do in terms of investing now in growth?
Yeah, so
Or are you looking at maybe even expanding further your global footprint?
so that's a very good question. Our vision is to become a $5 billion company by 2026.
Okay, how are you going to do it?
Okay, and that's on There are key 5 pillars that we have identified ourselves. One, I spoke about digitization.
Right.
Second is sustainability,
Okay.
where we are putting in a lot of money to see how we can become carbon neutral by 2050. That's our target.
Yes.
The second target on sustainability, we've taken how we can become 40% using free sustainable raw materials by 2030.
This is
Okay,
capital intensive,
not raw material,
not the raw
but
material,
energy
but
is, yes.
all of it will be.
So we'll
yes.
have, that's why we've
So
taken
there will be a
2050
capex element to it
going. So we
as
have
you
to
do
manage.
it milestone
Yeah,
wise.
yes,
Yes.
you
Yeah.
can't do
Okay.
everything all
Yeah. Sure.
together.
So sustainability is the second one. Then.
And then third is brand,
Yeah.
which I spoke about. On brand, there's a lot happening. Okay, we've not gone into cricket. Cricket is overcrowded. We have Sachin, who's a god of cricket, but he's also the god of sports, and that's why I love him, because he plays any sport. So he's a brand ambassador. We've gone into football. We've been with Manchester United for the past 8 or 9 years. We have also with the Indian Football League. We have Chennai there. So we're putting a lot of money behind the brand. Okay. Fourth is technology, which I've already spoken about. R&D is very, very important for us. Without this, it will not happen. And the last is our people. So COVID taught us a lot of e-learning platforms have come out in the organization. We're doing a lot around people because they are the assets of our
But this is
company.
not going to get you to 5 billion. So my
This will
question
definitely get me to 5
is, the
billion.
question is, are you looking to expand your global footprint?
The other vision we've taken is America is, in our vision, is going to contribute to $300 to $350 million, North America.
Okay.
Okay. And what we have already put in, we have already seen, is that if we are able to debottleneck these plants, we would need small capexes as we go along, okay, to build on some of the production facilities, and that's how we will get to this magic figure of 5 billion. That's the entire strategy.
Okay. One headwind, though, in India, I know the supply chain issues have been plaguing the passenger vehicle business. You said it was about a fourth of your revenue, right? You seeing any easing up in that at all? Because I know in terms of production has stalled in, had stalled in many OEMs because chips were just, in short supply. And so even though they generated demand, they were not able to meet it. Are you seeing any of that letting up now?
Yeah, it is opening up.
It is opening up.
The semiconductor availability is now becoming easy. So we are seeing production up in Maruti, in Hyundai. Tata is doing very well. Mahindra has come out with it. So the SUV, the UV segment is the growing segment.
Yes, it is.
In India.
Yeah.
Especially after the pandemic.
Yeah.
Those sharing taxis have gone away. People are buying private cars.
Correct.
So we are seeing a huge demand in the replacement market. In fact, Apollo today is clearly the leaders in the replacement market.
Right.
In the OEMs, we are seeing slow pickup happening already. In Q1, we saw a pickup happening, which is going on now. And further, as the situation eases out on semiconductors, it will come back.
So it's on the mend.
Yes.
As if I can put it that way,
Yes.
right? Okay. One final question. As we shift towards electric vehicles, does that have a big impact in the way on how you design your product, how you market it, how you distribute it? I'm curious to know. Forgive me for not knowing the technology very well, but I just wonder.
Well, we're already doing it. It's not a sea change like the automotive industry, but you need better rolling resistance. You need better torque. You need better sound noise from the tire, because now it's only a battery, so you can hear a tire. So these are some of the 3 aspects that you need a tire. And we are already producing it for some of the OEMs. Okay, we are launching our EV tire
in India or
in Europe and in India. We are launching in Europe and in India very recently.
So there is an EV tire.
There is an EV tire.
There is an 100%. EV tire.
Yes,
so it's an adaptation of the regular.
But it's not
tire.
a sea change technology to an automotive.
So it's incremental changes that you would have to make in your
assembly
lines.
Which we've been doing. You have to make capex also, small capexes.
Okay, not very substantial.
No.
So for you, it will not be as transformational a change as it is for OEMs in any fashion, right?
No.
Okay, just wanted to check that. Neeraj, thank you so much for the overview of the business. Is there anything we've left out in terms of challenges?
No, I think you've covered everything.
We've covered it all. Thank you so much.
Thank you.
And thanks for your time here in Davos. Have a good trip.
Enjoy Davos.
Yeah.
Thank you.
And we got lucky.